Hello and welcome back to another episode of the For the Property Investor podcast. And we're here with the weekly news, and it's our first episode for 2026. And I'm glad to say that Nick Bendell has made it back. Welcome, Nick.
I did make it back. It is so nice to be with you, Owen.
Yes, Happy New Year and all of that.
Yes, you too. It's a new year. It's 2026. 2025 is dead to me, and we have marched on into a new year.
Fantastic. I'm glad it is for some people. I feel like it's just hasn't stopped. But but it is a new year, and I'm determined to make it a good new year. And so stay tuned, and we'll see what comes out of it.
Well, I think maybe you should reframe it. Instead of saying that 2025 hasn't stopped, maybe you should say that you got into 2026 a year ahead of everyone else.
Well, no, that would mean that 2026 hasn't stopped, and I'd rather cut 2025's head off and be done with it.
Okay, well then let's go with that. Did
Yeah.
you did you come back refreshed?
I had a slowdown, but not a full stop, and which would have been nice. But we're a growing business, and we had lots of growing still happening over the break. So we're still full steam ahead, getting lots of properties leased, and so yes, but managed to enjoy a few of the public holidays as rest days. So that was nice.
And when you say growing business, you're talking about Leafield, a property management
Of
business in
course.
5 states.
Yes, we're in 5 states and currently leasing in at least 4 of them. So it's busy times.
Okay, well, I look forward to following Leafield's ongoing growth story throughout 2026.
Thank you, And how about you, Nick? You went off on a holiday overseas, enjoying yourself.
The rumors are correct. My business, Hunter and Scribe, is a copywriting agency that writes content for finance and property professionals, and we are open 365 days a year, except in leap years when we were open 366 days a year. And so I was working every day while I was in Cambodia and Vietnam, but did the bare minimum of work so I could do the maximum of sightseeing. And I can report that Cambodia and Vietnam are very nice places.
Very good. I'm glad some people can have a break and enjoy themselves while doing the bare minimum of work. So it's glad to see.
Well, shall we move on to our first stories of the year?
I'd love to see what news you've brought us, Nick. So yeah, please lay it on. What's in the news this week?
We've got 3 stories today. The first one being what to expect from interest rates in 2026. When it comes to interest rates, 2 powerful economic forces are pulling in opposite directions. On the one hand, the economy grew only 2.1% in the year to September, not much faster than the rate of population growth, which would ordinarily suggest the Reserve Bank should think about stimulating the economy. On the other hand, inflation is at 3.4% and has been outside the Reserve Bank's target range for 4 consecutive months, suggesting the RBA should actually try to reduce demand. Of the 38 economists surveyed by the Australian Financial Review, 18% expect the cash rate to be lower in June than it is now. 53% expect it to be the same and 29% expect it to be higher. Looking ahead to December, 24% expect the cash rate to be lower, 42% the same, and 34% higher. And 7 of the 38 economists believe the RBA board will hike rates at its first monetary policy meeting of the year on February the 3rd. They include Challenger's chief economist Jonathan Kearns, who used to work at the RBA. He said, Inflation pressures will make the board uncomfortable, and it is increasingly apparent that financial conditions are not that tight given low credit spreads and easy borrowing conditions, he said. Okay, Owen, two questions I want to run by you. What do you think will happen with interest rates, and what do you think should happen with interest rates? Let's start with your prediction. The cash rate is currently at 3.6%. Do you think we'll end the year with the cash rate higher, lower, or the same?
I would think that by the end of the year, we'd probably have some higher rates.
Okay. So that's you predicting what the RBA will do. Next question, if you were the RBA governor, what would you do with the cash rate?
By the end of the year or next
Hmm.
month?
Why not throw both at me?
Oh, um, I mean, by the end of the year, it's a tough call because things can change, in any 3-month period, when looking at the economy. So it's hard to make that call on the long term, which in interest rates, 12 months is a long-term basis. But in terms of next month, I think we're going to hold next month. I think there's still some data to be confirmed, to see which way it's going. We had inflation figures that came out a little lower than expected, and a little lower than what it was. So I think that gives us hope to hold on for at least another month, to see what else happens. So yes, I called it where I think by the end of the year we might see some slightly higher rates, but next month let's see a hold.
Okay. See, I'm quite hawkish. I I remember we were talking about this 12 months ago when the RBA started cutting rates. I think we both felt that they should have stayed higher for longer. And if I was the RBA governor, and by the way, there's no truth to the rumor that I will be taking the job. I'm very happy where I am.
Okay.
I would be raising rates. I know that doesn't make me popular, but I was actually never popular to begin with.
Very true. And okay, yeah, I'll take that, Nick.
Now, did you know, Owen, when the federal budget was released in May last year, the government
Mm,
forecast that it would run a deficit of 1.5% of GDP this financial year. In the mid-year update in December, that deficit forecast was reduced to 1.3%. So things are getting better, or at least things are less worse.
yeah,
Should the government cut spending to suck demand out of the economy and put downward pressure on inflation?
absolutely. That should be the number one thing the government should be doing to help the economy and help households, in terms of from an inflation point of view and from a interest rate point of view. But this government just doesn't know how to put its hands in its pocket and not take them out. So, um, yeah, do I think it will happen? Probably not. Yeah, they might let in some more immigrants at the same time. Whether they're permanent or not, the more demand that comes in as well. Yeah, it should be the one or the other, Nick. We can keep the economy growing by the government spending, as well as the government bringing in more demand in the way of immigration, to help fuel the economy. But we shouldn't be doing both at the same time. And yes, there'll be people saying, oh, well, the federal government is now cutting down on the number of people coming in, but there should be a more dramatic cutback of that. But they're desperate to keep the economy in the positive, so that they don't get slammed at the ballot box, or in the opinion polls, at least in the short term. And but in the meantime, they're pushing inflation up, putting pressure on it, to stay high, and which is going to end up pushing interest rates up. So, you know, they 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 got to pick one. They either have to do the right thing for the long term, or do the right thing for themselves in the short term.
Okay, so
And
the second one
they,
it
they
is.
yes, it is, because they can't do the right thing for the country and for the people in this country on a long-term basis. They're short-sighted, uh, all in their own interest. It's obvious.
Okay, now
So
I'm going to slightly push back there, and the thing I'm about to say, I've said it before on this podcast. I think yes, governments on both left and right often make bad decisions when it comes to the budget, but I think the fault is more with us, the voters, than them, the politicians, because we incentivize them to make these bad short-term decisions, and that's why you will recall I made the point that when I run for Prime Minister, the slogan of my party will be, "It's all your fault. I will blame the voters for this mess." And I will say,
well,
please elect me.
it is the fact that people got sucked in by um, the Prime Minister saying how nice a guy he is, and if you have to go around telling everyone how nice a guy you are, then maybe you're not. Um, it's it's speak with your actions, and not your words. And yeah, he's got to be doing the right thing for us at some point, because so far he's hasn't done much.
Okay, so first podcast of the year, and you're already giving some love to Albo. Let's move on to our second story. Property investors enjoy income boost. Australia's median rent increased 5.2% in 2025 after rising 4.8% in 2024, according to Cotality. What's most interesting, though, is the long-term picture. In the 5 years to 2025, rents grew 42.9% compared to just 7.5% in the previous 5 year period. Due to the strong rental growth in recent years, the median renter now devotes a record high 33.4% of their pre-tax income to paying rent. Owen, as I mentioned, rents increased 5.2% last year compared to 4.8% in 2024. Are you surprised to learn that rental growth actually accelerated last year? Because I know a lot of the commentary was suggesting the opposite.
No, I'm not surprised. And I think much of the commentary was talking about maybe major markets in Sydney and Brisbane that had huge growth before that, and where the maybe rate of growth had slowed, but it was still accelerating, or increasing. Um, so yes, not really surprised. But what I'd like to see is yeah, you've talked about the last 5 years. Yeah, let's look at the last 10 years, and see where it is. And I really think rents are really just trying to play catch up. And if you compare it to the rate of growth compared to the value of the property, um, I think you would find that the values of the property have outstripped the growth in rents. So in that way, rents haven't really kept up with the values of the property. So as a percentage return, um, it's actually gone backwards in a lot of markets. Not all markets, but certainly in a lot of the major markets, the rate of return for a property has actually gone backwards.
So you made an interesting point. So in the 5 years to 2020, rents increased by a total of 7.5%. And then in the 5 years to 2025, they increased by 42.9%. So do you think that that 42.9% figure, a lot of that was catch up?
Yeah, well, I mean, yeah, compared to the previous 5 years, it was 7.5%. So if you amortize that out across the last 10 years, then it's still not a lot.
Hmm.
And then you look at the price growth in a lot of these markets that have happened in the last 5 or 10 years, and you would find that the rate of growth of these properties have well and truly outstripped the rate of increase with rents. So again, that means that your rental return on your investment property has actually gone backwards.
Okay, well, I want you to give me a big picture view now. We heard that the average renter is devoting a record 33.4% of their income to paying rent. At the same time, the average owner is devoting a near record 47% of their income to paying their mortgage. What do those numbers tell you about the state of the Australian housing market?
Well, yes, and this we're talking about different figures here. So yes, those record figures aren't good because it means that renters and owners alike are having to commit so much more to keeping that roof over their head. But it just shows that there's obviously a lot of demand in the market, but probably the more specific reason of why this is happening is not necessarily an increase in demand, but the lack of supply of new properties that are available to buy and also rent. So it's not investors' fault because renters need to live somewhere. So all the investors are trying to buy properties so that the renters can rent somewhere, because renters, not all of them can buy. So they need somewhere to live as well. And if there was plenty of investment properties, then rent would be going down at the same time. But obviously, there's that demand for a rental property. And owners as well as renters are needing to commit more and more of their income to be able to keep that roof over their head.
We've spoken today about housing supply, demand, the economy, immigration. All those things are going to come together very nicely in our final story today, how Australia will look 40 years from now. Australia's population will get bigger and older in coming decades, judging by the latest projections. Population growth has slowed from 2.5% in the 2023 financial year, which was historically high, to 1.5% in the last financial year, which was slightly above the long-term average, according to the Australian Bureau of Statistics. And new projections from the Centre for Population suggest population growth will slow to 1.3% this financial year and 1.2% next financial year. And our population, which is currently at 27.6 million people, will reach 41 million in 40 years' time. And during that period, our median age will increase from 38.6 years now to 43.7 years in 4 decades' time. So this is a really interesting picture, Owen. As you saw, population growth is expected to slow, but is still going to increase. Do you think we can build enough homes to accommodate all these extra people?
Well, at this rate, the answer is going to be no. It's because there's no sign of us being able to catch up on what we're behind on at the moment. So yes, who knows where they're all going to live.
Well, population growth has pros and cons. Do you think the pros outweigh the cons, or do the cons outweigh the pros?
Um, it's I don't think it's one or the other really. It's we got to take them both as they come because um, we're we have to live with it. Yeah, we need the population growth, and it's going to happen anyway. It's not like we can we have an option to stop it, because the worst thing that can happen is that you haven't given an option for is for our population to go backwards. So so we need to accept the pros and the cons and deal with it, and so that we can try and make the best of it.
I mentioned earlier, I want interest rates to be higher. I want spending to be lower, which of course makes me very unpopular. And I'm pretty sure this is another unpopular opinion. I want our population to be much larger. I'm pretty sure most people would disagree with that. So I I'm really making myself unpopular, but I would like the population to be significantly larger.
Yes, and I don't necessarily disagree with you, but it needs to be done sustainably, and it needs to be done when we can accommodate everyone. And that point in time is not now. So we always need to be moving forward and growing, but sometimes we just need to pull the foot off the accelerator. When, whether that's in a growing business or whether it's in a growing population that needs to handle that growth in an economy or a country like Australia.
We've been talking population projections for the next 40 years, so very much the long term. And am I correct in thinking you think our current government, they are long-term thinkers?
No, Nick, now you're just baiting me. There's I don't think current government can think past their nose. So it's in terms of the future of our country, and our economy more specifically. I think they're just thinking about the next election. So and trying to get there as quickly as possible before they blow everything up.
Okay, so let me throw another interesting statistic at you. As I was going through these population projections, I found something really interesting. I mentioned the median age is going to increase from 38.6 years to 43.7 years. So right now, there are 3.6 people aged in the 15 to 64 year bracket for every person aged 65 and above. So in other words, there are 3.6 workers for every one retiree, more or less, right now. But 4 decades from now, there will be 2.6 workers for every one retiree. What will that mean for the economy?
There'll be a huge burden on the workforce, and there already is. So within 40 years' time, hopefully we've got everyone in a position where they're effectively self-funded through superannuation, which will take a huge burden off the federal budget from a social security point of view. But the way if we keep going the way we are with this current government, it's the burden, the social security burden on the federal budget is going to keep on growing. Whether it's through Medicare, whether it's through family tax benefits, whether it's through the dole, or whether it's for single parent payments, or NDIS, or whatever else you want to pick. There's Medicare as well. Yeah, all of these things add up. They're all social security benefits that add up. Some of them are absolutely necessary. We need a safety net in our economy and our country for the population. But at the moment, we've got a retaining wall, and we seem to be building this retaining wall bigger and bigger for more people and in the country. And I just see it as a vote buying exercise by successive governments, and it's just going to make our country worse. We're at risk of becoming another Venezuela. Look at their economy; it's disastrous, and this is what happens when you have successive socialist governments that just do not know what they're doing when they're managing an economy.
Well, I was wondering if you were going to be in a better mood in 2026 than in 2025, and I think you've answered that question. Thank you for some more wonderful ranting today, Owen. I love the fact that you're always forthright. You say what you think. You have some really interesting takes, and I appreciate your analysis.
Thanks, Nick. And I thought I was in a good mood. All right, we'll see you next week with the weekly news. Looking forward to it.